Wanted to get your macro thought on this kind of action that we're seeing. I mean, obviously, today is a good day, right? We'll take it, a good day after so many bad days with the markets moving to the upside. But do you believe it?
Depends on what time frame you're looking at. I put out a note Sunday night about Monday being ugly and then looking for a turnaround Tuesday, which we're certainly getting in spades. So I would say, as I wrote yesterday, I tweeted yesterday, that the odds favor a low in here, but not the low in capital THE. This is certainly a short-term tradable low. Listen, you went down 30%. We have not had back-to-back up days since the peak. So after you get a rally, we need to see at least some kind of follow through that says, okay, it may not be the low of all lows, but at least the huge downside momentum has been stemmed. So it's an encouraging day. It's only, what, 1:20? We still have a couple of hours left, and the volatility is going to stay crazily high for a while.
Yeah, I agree with that. I mean, I think we're getting very used to some very big moves. When you talk about some names and trying to trade in this market, right, which is down 35% off the highs, you look at specific names. How are you picking the tradable names or the names to nibble at?
I think with volatility this high, when the VIX is above 50, it's very hard to be nimble and to trade, because as you're queuing up trades or as you're kind of letting them shake out, you could have an outsized move of 10% either against you or in your favor. So it makes it above, the VIX above 50 makes it certainly a lot more difficult. But essentially what I've done is I've separated my picks, my calls, my areas into companies and sectors that I think are definitely going to survive. And then there's a small population of looking at sectors that we're going to lose a bunch of companies in, but maybe you buy the best in breed in the sectors that will see a lot of casualties. So like I gave Wendy's, which people say that's kind of a curious pick. It's, quote unquote casual dining. Now listen, Wendy's is best in breed at a lot of things. They're great at refurbishing their stores to drive growth. They're among the best at it. Although they're highly levered, so cautionary sign, but they only have 120 million that needs to get refinanced this year. They have enormous free cash flow yield. Dividends going to get cut, which we'll see across the board for probably the rest of the year. But don't underestimate how important that breakfast rollout was. So Wendy's has already almost doubled from the low of a couple of days ago. I wouldn't buy it with both fists after it's doubled from a couple of days ago, but that's one I think is certainly a survivor. We can go on to DaVita.
Yeah. I know you have a few others. You have DaVita, DVA.
Right, in the medical space, which does services for hemodialysis, enormous free cash flow, 10% free cash flow. And through stock buybacks, which is now the nastiest word on the street, their share count is down almost 50%. So much, much, much fewer shares out there. Obviously an opportunity to juice earnings. The company's not down that much, but I do think, so the risk here, this is a long-term, this is a super play. It almost always has been. This is a go-to in rougher markets. The risk for people to remember is the patients that use DaVita's services have already pre-existing conditions, and they have diabetes, kidney issues, etc. So if things get dramatically worse, clearly it could impact DaVita's patient base, if you will.
Okay. So this one makes it through some of the rough times, those rough patches, and then you have Alibaba. Interesting, you're picking the Chinese play.
So Alibaba is, I don't want to say it's a perennial pick, but I've talked about it here a number of times. A few weeks ago, if you watched, even though the news out of China was dire, the Chinese stocks were trading much better. I heard people saying it was all manipulation. To me, that's nonsense. So I always look for, as I said before, I love best in breed. Just like here, the news is going to continue to get worse. Stocks are going to bottom. Stocks always bottom in bad news. They don't bottom when it's sunny outside. I love Alibaba because unless you think the Chinese economy and their ways are long gone, and they're going to go back to essentially communism. Chinese Alibaba is the Chinese version of Amazon, and they are going to grow leaps and bounds as the Chinese economy not only continues to recover, but it's going to expand as well. They may change a little bit, become a little more of a consumer economy versus an industrial economy as we change our supply chains more domestically. But I'm telling you, do not rule out the Chinese or Alibaba in any market.